tax law changes for 2022. So the good news is it should be an easier tax year, especially for us returning people. The new people obviously don't know much difference. So to begin with, the stimulus, there is no stimulus for 2022. So that's good news. That means we don't have to ask a question and have them never give us the right answer. So don't have to worry about that this year. Expired, a lot of things have expired. So the enhanced child tax credit and advance payments. So that was the money that they gave, last year in 2021, whatever, you got the advanced child tax credit. They didn't do that for 2022. So again, we don't have to worry about asking that question. And everything went back to the way it was. So it's $2,000 per child, ages 0 to 16. As you recall, last year they bumped it up to $3,600 if you're under 5 or younger, and then of course 3,000, 6 to 17, and 17 was a cutoff. So there's probably going to be a little explanation going on this year because that child tax credit changed so much, but hopefully they got all that information through the media. But everything went back to the way it was before the pandemic. So $2,000 per child, and it stops at age 16. They did not change that date. The maximum credit for other dependents still is at $500. Next, the earned income credit. So again, big changes, and the big change is just it's going back to the way it was for the most part. So if you guys did some returns last year that had they didn't have any kids on the return, and you notice their earned income credit or the refunds jumped up considerably. Okay, if they were based on their income and everything. So single people had some pretty good refunds if they weren't making much money. That's not going to happen again this year. So one is the max was 1,502, and I did a few returns where they actually got the max. Now it's back to 560 where it used to be. All right, and then also the age is between age 25 and 64. So I did do a couple returns where they actually were of retirement age, 65 and over, and they were still working. They actually got the earned income credit. They're not getting it anymore. So that's done, one and done. And then also the younger people, 19 plus. So even those which we kind of got maybe a little bit in trouble where we gave it to a student that shouldn't have had it, it doesn't matter anymore because now it's back to age 25. So those people that are students, say 2021, making a little bit of money, Drake sometimes gave them the earned income credit. We had to exclude it. It doesn't matter anymore because it's back to the way it was. So, and then the big one, of course, we've been using the 2019 earned income if it helped them for the last 2 years. Now it's strictly based on what they earned in 2022. So if they didn't work, they get no earned income credit and they get no child tax credit either. That was also a factor in here, is that they didn't have to work last year. So now they have to work to get the child tax credit too. So again, whoever's doing the returns, you might have to do some explaining because their refunds probably will be dropping. That group, the refund might be dropping. So just say it's just back to the way it was. So they should remember it wasn't that long ago. But anyway, you guys need to be aware of that. Some things that didn't change with earned income credit, and this doesn't really affect too many of our clients, is the investment income. So it used to be capped at like $3,650, like your dividends income, interest income. Now it's bumped up to $10,300. So I'm not sure why they did that, because typically that person probably might be retired and over age 65, so they wouldn't get it anyways. But anyway, this really isn't an X-Tax client too much. This one, though, I want you to be aware of, and this was there. They think they changed this a couple years ago, that you can get earned income credit with married filing separate filing status. So to get that, you would have to not live with your spouse the last 6 months out of the year and live with a qualifying child for at least 6 months. So years ago, it used to be you had to had a household filing status, and mostly that person probably still could meet that requirement, but they actually have to be paying for the upkeep of a house or an apartment or something like that. So in this case, they don't need that. They could do married filing separate, have a child living with them, and they didn't live with their spouse the last 6 months out of the year. Just want to make sure you're aware of that. The child and dependent care credit. So last year, a lot of money went out the door, or the IRS paid people a lot of money for their daycare, which was refundable credit. It's back to the way it was before the pandemic. So instead of $8,000 per child for daycare expenses, it's back to $3,000 per child per dependent, and it's limited to 2, just like it always been. So 6 would be the total, $3,000 for each. It's non-refundable again, so it can only offset taxes that they owe. If they don't owe any taxes, it's not going to help them. The flex spending contribution, what that is if your employer is taking money out for daycare, it's back to $5,000. They did bump it up to $10,500, so that really doesn't apply too much to us because we're not the employer, but just wanted to make you aware of that. That's what's going on with dependent care credit. The charitable contributions, sorry to see this one go, really, because I think a lot of people liked it. So you have to itemize back. If you're going to use charitable contributions as a deduction, you have to itemize, file a Schedule A, which a lot of our clients can't do. So they were giving us the last couple years. Last year, if you did married filing joint, you could get up to $600, and above the line means it's basically on the front of the 1040. So before the adjusted gross income. So anyway, that's gone. So a lot of our clients are probably going to ask, I'll give you this amount because at least they get a bump up. I guess they get some kind of deduction. Well, you don't anymore unless you're able to itemize filing the Schedule A, and most likely they're not able to do that. So I don't know why they didn't continue that on, but they did not. If anything changes, but I don't see that happening because I'm doing this on January 2nd. So energy efficient home improvements credits, we don't get a ton of these, but I think it's been going on for, I don't know, maybe 10 years. So there's a $500 limit. A lot of people have already exceeded that lifetime limit for doors, insulation, et cetera. That got extended into 2022. So they did make some for 2023. They made it better. So we did get several calls when this law went into place that people got all excited, but it actually was for 2023 is what they should be getting excited for, because now it's an annual limit of $1,200. So that's very good. So they made a really good change to this. Instead of a $500 lifetime limit, now it's $1,200 annual limit. But that's for 2023. So if you see the person and talk to them, you can say, yeah, for 2023 you're good, but for 2022 it was still the $500 lifetime limit. That didn't change. The percentage for cost figuring the credit increased, or it's going at 30% up from 10%. This is for 2023, and more home improvements will qualify, energy efficient improvements. The big thing we got calls on a lot was this one right here, this solar alternative energy. So it went from 26% to 30% of the installed cost, and that was for tax year 2022. So it wasn't a big change. It went up 4%, but for some reason it was a buzz in the media because we got calls on it. So it is for 2022. And this credit is extended for quite a while, for 10 years to 2032. So this qualifying battery storage, you don't really need to know that. But I mean, if anybody has anything of this, obviously this is going to be more of our experienced tax preparers doing these type of returns with energy improvements, just because we don't get that many. So it's even hard to train you guys because you won't see that many of them. But just want to make sure everyone's aware of what this is. And it's a non-refundable credit is what these are. I think this one will go forward though. I think this one might go forward for 5 years if they don't have enough tax to eat this one up, but I'll have to double check on that. The plug-in, so basically if you have a plug-in electric vehicle, the reason I'm just telling you about this, again, it's not like we're gonna get a lot, but I did get some calls on this, so you might get a client asking you questions on it. Again, if you're a new preparer, just say you'll get help and you'll call them back. But they did make it better. Again, it's for 23. For the most part, I don't know if anyone's going to qualify in 2022 because I haven't done one of these in probably 5 years. So it's when they institute a new law, and they make more of these cars available for the credit, then you start seeing it. So for 2023, when we do next year's tax returns, we'll probably see a few of these. But this is, so just want you to make, I'm not going to go through these, but just be aware of this is kind of his. If someone asks me, I'm going to have to open up the book or look on a computer to get the specifics, because I'm not going to keep this in my head. Final year, 100% business meal deduction. So for our self-employed people, if they had business lunches or dinners, whatever, and they were at a restaurant, we should have been putting it on as 100% deductible, and that's on the Schedule C. There's a difference between it says 50% or 100%. So give them 100%. This is the last year, tax year 2022. I don't even know if they were aware of it, honestly, because I don't think I had anyone ask me questions about it. I put it in there as 100%, but honestly, I don't know if our clients were even aware of it. But just so you know, it's going back to 50% in 2023. Form 1099-K, what that is, for those that don't know, that's if you're processing, like X-Tax gets a 1099-K because we use a credit card merchant, and we have transactions over 20,000, so I get a 1099-K every year, just showing me a total amount of my credit card that I'm using. And the IRS uses that because they get a copy. They also get a 1099-K showing the X-Tax used, so that my income needs to be at least that high. So that's what this 1099-K is used for, is to basically try to find people that aren't reporting all their income on their tax return. So they were talking about reducing the dollar amount down to 600, and then these Venmo and PayPal, which probably most of you guys use, then they were going to have to issue 1099-Ks to all these individuals that aren't even using like Venmo and PayPal for business purposes, or using it for personal purposes, but they still would have got this, and we would have had to deal with it on the tax return, just showing it kind of going on and off, because it wasn't like they weren't actually a business or anything. Well, the good news is, just at the end of December, they went back to the way it always has been at 20,000 is the cap. So all these people don't have to Venmo and PayPal. They're not going to have to report 1099-Ks to individuals anymore. So we got a lot of calls over the summer, all the way even back to tax season. I remember they were talking about this. So they're like, what are we going to do? So we finally figured out how to handle it on the tax return, and then the IRS changed it back. So there's a chance that, say, Venmo and PayPal and these other merchants might have their systems already set up, so these 1099-Ks may spit out because they can't switch it back that quick, because the IRS just pushed this through, or Congress did. So if we get one, just let us know. We're just going to put it, I mean, as long as it's not a business, we're just going to put it on and then take it off basically on the tax return, so then it matches and they don't get an IRS letter. The mileage rate, this jumped up. Obviously, gas prices went up, so unfortunately, it went up in the middle of the year. So we're going to have to ask them how many miles you drove before July 1st and how many miles did you drive after July 1st. And we're going to have to update our self-employment form, because this is only relevant to self-employed people. So it's not going to be a lot of people. But usually our self-employed people do drive for business. So we will need to know, if they just say half of it, then half of it. I mean, they're going to have to prove with a log if they ever get audited. But anyway, we do need to know how many before and how many after, because it changes the amount. For city tax law changes, so this is good news. Non-residents, so you guys have been filling out, at least returning preparers have been filling out this COV form, or you should have been filling it out, basically telling you that they're working from home due to COVID. Well, now, as you know, people are working from home, and COVID for the most part isn't affecting businesses as much anymore. So the form no longer is required. So it shouldn't even be in our tax software. But as of today, I don't have City of Lansing in my Drake yet, so I can't see it. But we do not have to fill this out anymore. So you're still going to do the same thing. How many days did you work, in the office? How many days it worked at home? This is for non-residents only. And of course, you're going to fill out the W-2 screen just like always. And then the W-2 screen also, but you don't have to do this COV screen, which is good. Just one less thing we have to do. The city would like it if employees that are working from home and they get a big refund at the end of the year, and big for the city is considered probably like $400 or more. The city does not like being a bank and then just issuing these big checks to these people. They'd rather have you just stop taking the taxes out, and then you don't get a big refund at the end of the year. Because and I've seen this too, where they actually request like the W-2s or anything. So they're making it more of a pain to get your refund. So I would recommend if you do a return and someone's getting a pretty decent size city refund, just say, the city prefer you if you just would change your withholding with your employer, because they might, ask for proof that you really didn't work in the city, and then there's just, it's extra paperwork you got to deal with before they release your refund. Some address changes with the payment vouchers, so they're not using the PO box anymore. So I've already ordered envelopes. I read about East Lansing too. I have to verify that. If just want to make sure we're going to get rid of all of our payment vouchers, City of Lansing returns, and start with a brand new one, and I'll double check on East Lansing. City of East Lansing return, we've been e-filing since 2000, or actually, I think it was just a couple years ago. So anyway, the City of East Lansing has been around the income tax return since 2019. So the city now has some data, and they usually get this from the state of Michigan. Basically, the Michigan will give them a database with mailing addresses, and if it has an East Lansing mailing address, they then assume you're a resident of East Lansing, and then they look to see, did you file an East Lansing tax return? If you didn't, you may get a letter, and then they'll say, and they'll just add that income and say it's all taxable to East Lansing. So Lansing's been doing this for years, so East Lansing sounds like they're going to be doing it now, so we might get some letters, and then we just have to probably prepare an East Lansing return for that person if they were supposed to, and then they would pay their share if they owe any taxes or not. But I guess East Lansing says they think there's a lot of retirees, and this is probably true, that has probably investment income, and it's high enough that it actually they will have to pay taxes on that. So I don't know if these retirees actually thought they were exempt from it, or they just didn't even know really about the city tax return because they're not working anymore, so they probably didn't even think about it. But anyway, we might get some phone calls, and then have to prepare some East Lansing tax returns. So that's it. Other than, there were a lot of changes, but for the most part, it just reverted back to the way it was. So it's going to be it should be an easier year for a preparer, just because we don't have to ask as many questions like stimulus, advanced child tax credit, and all that. So that part's going to be nice. And that's all I have for our tax changes for the year.